Time to talk real estate and a wrap up of the 2021 property market, what we saw, who benefited and who didn't. Joining us live is Tim McIntyre, News Corp real estate news editor. How are you this morning, Tim?
Good, thanks, Janie. How are you going?
Very well indeed. Well, for people in the property market, it has certainly been incredible, hasn't it? Not only for the city, but also for the regions.
Yeah, it's a very unusual situation for this country to have markets positive all over the place, all capital cities, most major regional centres. You know, usually one's on the way up, the other's on the way down. But, you know, the low interest rates had everything firing the last year at least.
And with the uncertainty of Omicron, we're seeing overseas a lot of lockdowns and so forth, but not really here. We're just seeing a few cancellations of certain events and so forth. So with this next wave, I know it's early days, but what are you looking out for?
Well, the property market, as long as there's still a little bit of you know, stimulus in the form of low interest rates and the RBA is still putting some money into the economy. You know, in 2020 we saw a bit of a slight dent in confidence for a little while before markets started to take off. And you know, a lot of people in Australia, when times are uncertain, they put their money into their house or into property. And at the moment, like, the market obviously hasn't suffered. It's gone very well. I'm not sure that this wave will have any negative effects on the property market at all, based on the fact, especially that most people are now getting to that double vaccinated level. Things are still open, businesses are still running, and you know, there's a lot of uncertainty, but it'll take some time to see what effect that has, if any, on the property market.
Has the market cooled off at all, or are we still seeing an incredible rise?
It's cooled off in the late stages of the year as more people have started listing their properties. So the biggest driver of any property growth period is a shortage of listings for the number of people who want to buy it. So currently there are more properties starting to be listed, which means that, you know, if you go down to an auction or an open house, you might find yourself up against 5 or 6 other buyers rather than 20, and that's what stops the ridiculous prices from actually coming through, like we have been seeing during the year all over the capital cities. And yeah, so as the more listings come on, people will start realising, well, it's not all or nothing on this property. I don't need to break the bank. And on top of that, some of the restrictions from APRA that came in around serviceability made it just a little bit harder to overstretch yourself when you're borrowing, and that'll just take a little bit of heat out of the market. But fundamentally, it's still a great time to buy property if you've got a deposit, because with rates where they are, it's still a very good time to be paying off debt.
A great time to buy property, as you mentioned, and we're hearing some people are selling their property and then holding on to that and then renting. Is that a good idea?
Look, you'd have to look at an individual circumstance for that. But if you were an absolute market genius, there could have been a sweet spot there where you sold your property for a ridiculously high price, rented for a year or so, and you might be able to buy something, you know, a little bit better for a little bit less than you would have a year earlier. But gee, that's a very fraught way to conduct the way you buy property. So, like in any time, you sort of buy and sell in the same market, unfortunately. So if you're selling at a high price, you're probably going to buy at a high price too, unless you rent for a very long time, and that may or may not suit your personal circumstance. I'd probably be a bit nervous to do something like that.
And it hasn't been so good either for first home buyers, and also with the low interest rates for some self-funded retirees. So it's not all good news, is it?
No, it's not. Like, I mean, people who own property already are sort of, you know, enjoying a good period, but first home buyers are really up against it. It's been really hard for a very long time for first home buyers. It's been years since they've been able to get in, like, with any kind of ease to the market. It's very hard to save a deposit at the moment because interest rates are so low, as you mentioned. And then they've got, you know, people of older generations telling them to stop eating smashed avocado and everything like that. Well, if you gave up smashed avocado, it would still take you about 80 years to save up for a property, if that's how you're operating only. But like you say, interest rates are low. There's not much money in cash. There's no money in term deposits. A lot of other investments are struggling. So self-funded retirees as well are people who may have some years ago thought, well, here we are, we've got what we need here, we've got a good return, and you know the portfolio is going well. Well, they might have to rethink that now. because, you know, banks are paying less than 1% when it comes to cash investment.
Yeah, it'll certainly be interesting to watch the interest rates and how long they stay very low for. Thank you so much for your time and expertise this morning. Tim McIntyre, News Corp Real Estate News Editor.
Pleasure, Janie. Thank you.